In the previous video, we used the training software to draw roadmap charts. In this video, we're going to use the training software to generate the information that you need to determine if a price and time squaring has occurred. What you see on the chart right now is all the information that you need, and that consists of the price at which a swing has ended or begun, the range of the swing, and the number of trading days, or in the case of intraday data, the number of bars, and the calendar days of the previous swing. There are 5 different methods, 5 different ways that you can determine if price and time have squared. One of those methods is squaring the price range in the prior trend with time in the current trend. Naturally, we cover all those ways in the book. But this is the method that we're going to be using today in the video. But the technique and the procedure is exactly the same for all of the different methods. You take the same steps. The first step is that you convert the range of the prior swing, which is 191.12 points, to degrees of a circle. If you use the formula in the book, you'll quickly determine that 191.12 points is equal to 103.43 degrees. Because we're squaring time with a price range, we look at trading days, which is 24, convert that to degrees of a circle, and calendar days, which is 34, and convert that to degrees of a circle. Now, in the book, we also provide a table of static degrees so that you can quickly refer to a table if it's within the range. And I believe this table goes up to about 250. With a little ambition, if you want, you can apply the formula in an Excel spreadsheet and make the static degree table run out to any length that you want. But we can see that 191 points or 192 points are for, in that case, 191 days, hours, years, minutes, whatever. But 191 is the equivalent of 103 degrees, and 192 equates to 109 degrees. So you can interpolate 191.12 points as probably between 103 and 104 degrees. We know that there were 24 trading days, but we can see that 24 is 297 degrees, not a direct hit. We slide down the table to 34, and we can see immediately that 34 calendar days is 105 degrees. And we know that the range is between 103 and 104, and that we're within the margin of error for a squaring. So it's really that simple, and the procedure is the same for all of the different ways that price and time square. Now, price and time, or the time in this swing while it was occurring, probably squared at other points or at other times with 191.12. And how do you know which one is going to be the most significant? There's nothing within the square of 9 itself that will provide that information. The best way to obtain it is to understand the personality of the ticker that you trade. And just to provide a demonstration of what we mean by that, this is a 90-year chart of wheat prices. Gann regularly used 100-year charts. He always understood where the current price was in relation to historical highs and lows and major pivot points. And he also understood where in time his current ticker was in relation to historical highs and lows and in relation to the current swing as compared to other swings. Gann was a prodigious worker. You don't need a 100-year chart in order to successfully apply the square of 9, but you can't not have too great an understanding of the personality of the ticker you trade. And just if you did the work or anything approaching the work that Gann did when he traded, then you would probably have a good understanding that a bear swing following a bull swing that was already X plus days in length, that it was likely to continue to a minimum of X plus days. Of course, there are other ways you can do that. Two methods that we cover at Trading Fives are you can use Fibonacci ratios, which project price and time to help in that endeavor, or my favorite method, the Hurst method, which gives you a pretty good handle on when you should be looking for potential squarings. And of course, in the previous video, we covered the roadmap charts, and which, well, when the penetration of the lower channel occurred, in the case of a bear swing, that gave you an indication that a reversal may be at hand, and you'd want to check for price and time squaring at that point. Let's put the information back on the chart. Okay, this was an easy one. Now, it doesn't always occur that easily, and there are tools to help in those situations. Let's just say for a minute that 34 calendar days did not hit, that we didn't see the 104 or the 105 degree measurement, so that we didn't know we had a squaring. You have to know that squarings occur not only exactly on the number, but at 90 degree offsets, and that's the purpose of the rotations tool. It comes with both a 90 and a 60 degree set, the same as we use for drawing the roadmap charts. For squarings, you're almost always going to use the 90 degree set. But to use this tool, you enter the degrees of interest, which in this case were 103.43. And you can see that 2 times 45, 4 times 45, 6 times 45 is 90, 180, and 270 degree offsets of 103.43. So, for example, if the number of calendar days or trading days had matched up to 283 degrees, then we would have known that we had a hit because it occurred at 180 degree offset of the price range in degrees. And that's how you use the rotations tool. It does a pretty quick job of providing rotations. In real time, you often want to have a handle on what to be looking for, either in time or in price. And one way to do that is to use the Lookahead tool. And while we'll use the same swing, the same example, we had a range of 191.12. So if we pull up the Lookahead tool and we enter in 191.12 points, the tool immediately converts that to degrees, the 90 degree offsets, and also looks ahead and does the reverse mathematics to let us know that 15, and we'll use calendar days as an example, 15, 19, 23, 11, or 34 calendar days would be a potential turning point in the future. And this calculation could have been done the evening on July 13th, on July 14th, or any day thereafter. So you get a look ahead at what to be looking for. If you apply the other ways that price and time square and provide a different input in here, a range or a time input, then you get different results. Now, the formula for doing the look ahead function is also